Well, that's right. There's a special situation playing out in Vedanta, and it could possibly be a case for re-rating. Well, let's break it down for you. This week, the shareholders and the creditors have approved Vedanta's demerger plan, and the management expects the demerger to conclude by the end of the first quarter of next fiscal. That's Q1 FY26. Remember, the board had approved the demerger in September 2023, and the company has secured the NOC from both the exchanges. Now, post the demerger, the existing shareholders of Vedanta will receive one share of each of the new verticals. And this will result in 5 listed entities with separate focus on aluminium, oil and gas, power, steel and iron, as well as the existing business, which is Vedanta Limited, that will house the domestic and the international zinc businesses and also the copper business. Now, the demerger will allow each of these businesses to focus on its core strength. So it could offer some near-term potential value unlocking and maybe a re-rating of sorts just in the near term. Well, MK believes that investors would be more bullish on Vedanta Limited, Vedanta Aluminium, as well as Vedanta Power. On the valuation front, well, the current listed entity Vedanta trades at around 5 times EV on EBITDA. The assumption is they do an EBITDA of approximately 50,000 rupees in FY26, and also taking into account a debt of approximately 60,000 crores odd, which is roughly the number that they are at even right now. But the demerged entities could command a higher multiple than the 5 times that it's trading at currently. And maybe it could command approximately 6 to around 7 times EV on EBITDA, depending on the nature of the businesses. Now, bulk of the value will be derived from the aluminium business, which is very, very well placed because it's focusing on captive sourcing of alumina, coal, as well as bauxite. That could lower the cost of production of aluminium. That will help their profitability. Vedanta Limited, well, that will house the zinc businesses, which includes a 63% stake that it has in Hindustan Zinc, which is the listed entity, and also its international zinc business, but it could get some kind of a mild negative value for the copper operations, which are shut. Its oil and gas, power, as well as iron and steel businesses, well, that could attract a multiple of roughly around 5.5 to around 6 times or thereabouts. So as you can see, bulk of the value will come in from the aluminium business. Hence, the sum of the enterprise values of these individual businesses will be roughly around 2.7 lakh crore, which is more than the current enterprise value, and X of the net debt, where there could be some potential upside for equity shareholders. We're talking about the current market cap and the derived market cap in the future. That's potential value unlocking in the next 6 months or so. Remember, this is a special situation. It could lead to Vedanta relatively outperforming its peers in the near term. So keep an eye out on this special situation. Well, thanks so much for tuning in to CNBC TV18. Make sure you follow us and stay updated on all our social media platforms.